Did you know that if it wasn't for what we call decentralized finance, the cryptocurrency industry last year probably wouldn't have recovered as fast as it did? Yes, that's true. So, in this video, we're gonna talk about decentralized finance, also known as DeFi, and how it worked its way to becoming one of the latest revolutions in the crypto world. Hey everyone, welcome back to Wealthy Value, the community for informed people looking to become financially smarter. Make sure to subscribe to our weekly videos where we cover the future of business, innovation, and finance. We've all witnessed how the COVID pandemic gave rise to a plethora of changes in our everyday lives. All aspects were basically affected, and our finances were no exception to that. But investors and people in the financial world were quick on their feet in keeping up with the health situation. They saw the growing threat to traditional transactions and paved the way for more options, one of which is through decentralized finance. How? Well, first, let's define the term itself. Decentralized finance, or DeFi, is a system where financial transactions and operations are done in a decentralized blockchain without the need to go through middlemen like banks or lending companies. This makes transactions easily accessible to the public. And unlike traditional financial institutions, which have tons of requirements, such as IDs and proof of addresses, DeFi is flexible in the sense that you have more freedom in interacting with possible buyers, lenders, you name it. DeFi is largely software-based. That's why you can participate in it anytime and anywhere. And the main weapons you would need are simple. Just a device, could be your phone or laptop, and of course, an internet connection. As opposed to the ways traditional financial systems work, in DeFi, the intermediary is replaced by a smart contract. But it requires a decentralized platform to run on. And the Ethereum blockchain is the most popular one for it. For context, Ethereum is an open-source blockchain-based platform for creating as well as using smart contracts, which are common in what we call decentralized applications or DApps. Well, we know that Bitcoin is all the rage as of now. DeFi currencies are catching up close. Because as compared to Bitcoin, which still has traces of influence from traditional trading systems such as list of assets, customers that have access, and so on, DeFi is, in a way, more open. It wants to break apart all those traditional intermediaries. And unlike Bitcoin, which has failed to fully deliver its promise of a financial ecosystem that is managed by the people, DeFi has no principal figures and all protocols are performed by predetermined smart contracts. Just with this knowledge alone, you can probably guess why many investors of this time are starting to plunge into the world of DeFi. In fact, as of March 2021, DeFi is locked at over $42 billion. That's double its amount last January. And Maker is, arguably, the most prominent DeFi currency known today. Compound, Aave, and Uniswap are also great if you're looking for more options. But no matter what platform you would invest your time into, what's evident is that DeFi has been very promising as seen from its recent growth rate, appealing even to newbies of the crypto world. And in case you are in need of more validating reasons to finally go for it, I suggest you continue to stick around. The foremost advantage of DeFi is its permissionlessness, thus the term decentralized. There is no need to rely on financial corporations and deal with its red tape. Moreover, how about the fact that the COVID health crisis highly favors the blockchain system? Another benefit of DeFi is its stability. Because of its efficient cryptography and consensus algorithms, its blockchain network is nearly immune from malicious manipulations. Talk about security, right? DeFi is also transparent. Yes, despite being protected by layers of algorithms, it remains transparent due to its distributed ledger, which contains all activities in the network. Actually, DeFi apps make it a lot easier to monitor changes in transactions, be it when and how it was done. Along those lines, DeFi also assists in the smooth operations of lending and borrowing applications, effectively ensuring protection for both parties without compromising accessibility. And through savings apps, DeFi has helped users earn interest values, thanks to DeFi's freedom in moving assets from one lending protocol to another. To investors and financial leaders, all the pros mentioned are very encouraging to say the least. But, as we all know, everything has drawbacks and risks, and DeFi definitely isn't spared from that. Actually, DeFi's biggest pro, which is decentralization, can also become a con. As a DeFi user, you have to realize that a smart contract on Ethereum is not a full-blown assurance of decentralization. Some developers tend to create projects that just look decentralized, but actually are not. Another point to be taken is that some market projects don't undergo strict audits, leaving some blind spots here and there, which are prone to fraudulent activities. Tokenization can also pose a drawback, especially for investors who have little to no knowledge about their asset investments. And although the anonymity of DeFi smart contracts is good for the system's democratization, real cybercriminals can also use this aspect to their advantage. Yes, it's true that some projects, like Uniswap, have been very stable throughout their run. But we cannot ignore the fact that other applications still have to keep up. However, as time passes, DeFi innovations will surely keep going. And soon, these will offer newer and safer opportunities. We'll just have to wait and see. But that's it for today's video, guys. We really hope that this has been helpful to you. If you've learned anything from this video, why don't you leave a comment and a huge thumbs up? We'd really appreciate that. Till next time, thanks for watching.